Kayode, nice lift for the market. We have seen it pretty much range bound for the longest while now, to use a overused frame in the market, overused a phrase in the markets right now. But your views on the lift that we had for the overall index today?
To be honest, it was just the normal market conditions we've been seeing for the past few months. There have been a lot of activity, especially over UBA in the last few days and weeks, actually. And there's been some activity in the oil and gas sector. But apart from that, it's really just the usual range trading we've seen.
Let's pick up on UBA, because we had a conference call yesterday, or conference rather, at the stock exchange, where we had the management team explaining why they had this profit warning for the full year, giving the facts really behind the figures. Your key takeouts from that?
I think I think the management are trying to explain why they had to give a profit warning. And to be honest, UBA has been underperforming since 2009 under this new management team. And I think they're trying to encourage shareholders that they're on the path forward now. I mean, some of the reasons given, especially for the one-off write-offs, but to be honest, UBA have been giving exceptional item write-offs since 2009. Every quarter, there's some exceptional item that's been written off. And then some basically trade positions they said they had to close out, which they didn't give very much detail on. And they say the African strategy is on course, and that this year shareholders will start to see some of the benefits of that.
Are you convinced, though? Because that is the big question. Is the market convinced? We have seen a nice recovery in that share price, but at 2 Naira, is there any more upside right now?
I think most of the recovery is because it fell down so low that at price to book value, it's very attractive compared to all the other banks. But I think the management is yet to convince many analysts. This is a big year for the present management, and everyone wants to see how they progress. They have some encouraging Q1 numbers they've announced, but I think analysts want to delve into especially the income numbers, the interest income numbers, and see how much of that is from new business and on the credit side, and how much of that is from AMCON bond interest.
Let's touch on the foreign exchange market. Of course, you have mentioned the oil price and the oil and gas sector. We see the Naira, which has really been on a strengthening path. Touching on the bi-weekly auctions, demand seems to have fallen back. Why is that so?
I think it kind of it substantiates what the CBN governor was saying last year when demand was so high, that it's really from petroleum subsidy demand from due to the petroleum subsidy and demand from fuel importers. Now, with the current probes into the petroleum subsidy regime, and there's been less importation, demand has gone down, and it suggests that they were the biggest effect on the demand for dollars last year.
Is this rally in the local unit sustainable right now? Of course, we know that the oil price is elevated at around $120 a barrel. Nigeria is producing more oil right now, 2.5 million barrels per day. It's expected to add 180,000 barrels per day. So your views on where to for the currency? I
think if there's a partial subsidy that remains in petrol, in fuel. How long that will last, it will depend. But I think if we regulate the demand, moderate the demand for dollars, and so the currency should remain in this range going forward. You've seen the FX reserves accreting as well, which is good news. So I think in the medium to short term, we shall see the currency remain appreciating.
So you're a bull on the currency. Can you give us a price range that you're looking at right now?
I think if it continues like this, and the government continues to put in the reforms that they promise, especially in the power sector, and the fuel subsidy regime is better managed by the government, and I think we're probably looking about 152, 153 Naira by the end of the year.
Let's focus in on the oil and gas sector and your outlook for the likes of Con Oil and Oando, in light of the fact that we've got oil at $120 a barrel, especially Oando, for a stock that's shed so much of its value. Are the other prospects looking brighter as we've got an elevated oil price?
Yes, I think what's happened is I think it's a combination of two things. I think one is the new subsidy regime, which the government's announcing, where they're going to concentrate more on the big players to take part in the regime. So the likes of Orlando, Corn Oil, in terms of listed marketers, should see much of that business. I think in the likes of Orlando, especially and Corn Oil, they have upstream operations, and they're probably the only two marketers listed on the stock exchange with upstream operations. So with oil at $120 per barrel, the outlook, especially with the crisis over Iran and potential and fears of conflict in the Middle East, I think oil is going to remain quite high, and I think that looks well for them. And also Orlando as well announced last week that one of their swamp rigs had been, Shell had given them a contract for 2 years for one of their rigs, which will obviously help their bottom line as well.
Is there any indication of how much that is going to help their bottom line? Because of course, as I said, that stock price really has been depressed. There seems to be a lot of uncertainty as to how the strategy of the company is going to play out. But specifically with regards to that Shell rig, do we know what that means for the company?
I think in terms of Orlando, I mean, a lot of the pressure on the share price has been over the strategy. Orlando said they want to move more towards the upstream sector, and also oil services, benefiting from the local content policy. And with that, I think they have 5 rigs, which they acquired. And out of those 5 rigs, I think 3 are on medium to long-term contracts. So that's helped the bottom line. I think in terms of upstream, there are 2 OMLs they've invested in that are producing, which is run, I think, by NEA Egypt. So that's helping in terms of the bottom line. Now, they also said they want to divest from the downstream sector in their Orlando marketing. That seems to be on the back burner. So uncertainty over that has caused pressure on the share price. And also reports that they want to split out the upstream assets into a reverse listing on the Toronto Exchange, where some announcements made earlier, but nothing more concrete has come out. That also led to uncertainty. But I think going forward with a high oil price, more operations, more local content in terms of their oil services, I think especially if they can look at their capital structure, because Orlando has been criticized in the past for having a lot of short-term debt on their books and not having an optimal capital structure, being heavily leveraged. So if they can address that, I think it could look brighter for Orlando.